All right, good afternoon. Welcome to the end of day review for today. And today is Friday, the last trading day of this week. And this week we have a full fighting trading day. And around 10, we have the Jerome Powell, is the Fed chair, the chairman of the Federal Reserve. He made some statement that he say it's time to adjust the policy right there, and it make the markets really the first move is really jump, and then it reverse. That's the signature we see so far. When you have a big move, if there are no manipulation before that, then the first move gonna be a manipulation move, and then it reverse. So that is the pattern, how the markets or how the price action is formulating right there. All right, so we are in week 34. Week 34 right there. So we have 32 week and week 34 right there. So couple more week, let's say, yeah, couple more week. We just we are in this week right now. We finish this week, and next week we have economic data coming out, which is the GDP data and the PCE data right there. The 29 right here and the 30. Yep, that's the economic event we're looking for, and also a end of month option. Next month we have an end of a quarter also. So September will be very interesting. If we look at the charts or the monthly time frame, it's very interesting. If a short setup is forming, here's what we're talking about on the monthly. Let's pull out the chart for the monthly. Here's what we have for the monthly. We mark some of the September because September is a very interesting month right there. So if we see that it start reversal after the low of September, then you watch for a rally. You see that? Like this year, 22nd, it reversed from below, and then boom, it rally. It reversed from below also. You see that? It reversed from below. Yeah, this also reversed from below. Go low and then boom, it reversed. Actually, yeah, it back and forth. It reversed from it break the low. Okay, so here the short setup we see right there. So you see that, right? It's a test from below, break it, and we expect a reverse right here. We have a long downward right there. So yeah, we really want to see this guy close above this level on a monthly, and then the next month, September, it's gonna reverse and we're gonna take out this sell side liquidity right there. That's the short setup that we all have in mind. Anyway, when we go into today, so coming into today, we see that, we see a rally right there. It's like yesterday, you just swing before 9:30, right? And we expect it's gonna take out, the PM, at least the PM section right here, and that reverse, but it did not. And it failed to take out the high neither. So for the ICT, we don't see the setup for today. I mean, let's take a look at ICT setup that normally we are looking for, right? The very first model is the Udar swing at 9:30, take out take out the PM low, right? Is that right? Yeah, the PM low, the private reverse day right there. And today we have both. We have the euro swing at 9:30, before 9:30, and also at 9:30, because the Fed talk, give you statement around 10. You see, it's jumped real high right there. So we have a huge rally right there. Yeah, we see that setup. And we mark out the London right there. So basically for today, this kind of mix between the two setup, but it didn't hit. Yeah, it did take out. Yeah, right. It did take out and it reversed, but the take out is too big to see. To see the resemblance of this model. See that this two model, and also it also merged with this model because we have a gap down. Accusers, we have a gap up for today. If we look at the 15 minutes, right? If we look at the 15 minutes, on the regular trading hour, we see the gap up right there. So it come up, and in this case, it didn't take out the previous day high, but it did take out the PM, the PM right here. It take it out, and then it did reverse. It almost filled the gap. It not completely filled the gap, but it's almost filled the gap right there. It's almost filled the gap. Yeah, but not completely, but it did fill the gap. So basically, okay, so for this setup, yeah, right, pretty high or low, yeah, it failed to read to rate the previous day high, so it failed to rate that. It did not retard, but it did fill the gap. You see that the gap right here, it filled that gap, and then it reversed right away, and it take out the buys at the south side clear of this. Okay, before we go any further, here's the setup we saw late yesterday. It's beautiful setup. This is a reversal, but it's very special. So far we discussed that there are two types of reversal. The first type of reversal we call type 1. Basically right here, we have right here, break, reversal. Break, test from below the level they break. In this case, we're talking the level is 55.9275. It break the level, it tests or retest from below, and boom, it reverse. Yeah, you see it reverse, then boom, it go all the way right there. And if we look into the left a little bit, we see it form so-called double bottom right there. Right, break, reverse, and then this is from the 4 breakout reversal type 1 right there, which is very reliable. So basically we have two kinds setup, right? Type 1, which is break, reversal, break, retest, and reverse. And type 2 is what? Type 2 is test, break, and reverse. We show you the type 2 right here. Break. Do we have type 2 right here? Not yet. We don't have type 2 right here, but we can pull out the example we have right there. And so whenever we see this double bottom and also confluent with the reversal type 1, then we know that it's very high quality setup right there. So let's see. Here's our write-up for that setup. So it's no the bubble bottom formation where there's most reliable reversal setup right there. So it's a plus right there. All right, at first look right here, we see the pattern right there. Break, test from below and reverse. And we look in the left, we see another attempt right here to break the level, but it break and reverse. So it's a double bottom right there. That's a double bottom formation is most reliable one. And this reversal, when we see the break and reverse right away, look for this setup. So that is, it's kind of a reversal type 1, but it merged with the double bottom, so it's very reliable. So it's a derivative or it's a variation of the reversal type 1 right there. But right here, it gives another confluence, another signal that makes it very the most reliable for reversal. So far we have two kinds of reversal. Type 1, which is break, retest, and reverse. And type 2 is test, break, and reverse. Let's see the type 2 we have. And for simplicity, here's the type 1 we have right there. Here's type 1 right there. So you see that level right there, the low right there, the high right there. So it's break and then it's what? It's retest and then it reverse. That is the type 1 right there. Let's see the type 2. We do have a type 2. Let's look at this type 2. Let me pull out the screenshot we have. So here's one of the type 2 we have, right? It's happened in August 13 right there. You see that? This level, the key level right there is 14, 17. So basically it tests or retests from above. In this case, 3 times, right? 1. What level we're talking about right here? Either 16, 25 or 47. Yeah, if you go at this level, 16, let go of the level, you can see that. So it tests from above 1, 2, right, 3, and then break, and then it reverse. You see that? Test, break, and reverse. That's type 2. We call type 2. And this one is type 1. You see? They both have the same idea right here, but the order a little bit different. The order from the first step and the second step is switched between two of them. For the type 1, you had a break first and then you have a test second. Both of them have the reverse in the step 3, but the step 1 and 2, they kind of switch. For the type 1, the very first step is break. For the type 2, the very first step is to test it. And then it break it. For type 1, it break it first, and then it tests and it reverse. So that's kind of the nuance right there. But if we simplify like that, you can understand it easy right there. The challenge for us right now is we have to manage our, emotion, our impulse right there. We have to work, to manage our impulse. Wait for the right setup, wait for the formation, and then take the shot. Sometimes we're so eager and we make a very impulse, a trade right there, impulse trade right there, but impulsive trade right there. But it's okay. We learn, right? That's the emotion. we cannot just we have to let them out. We have to, you know, manage our emotion by let it out, and then we can see how strong it is, and then we learn to manage. We cannot manage if we try to compress them. We try to unprocess them. So we have to let it go, let it explosive. That means we have to give ourselves lots of room to make errors. We don't need to rush through this process because it is a process. You know, work with psychological, you know, challenge or emotion challenge is a fun process. And you have to give yourself enough room to fall and to grow. That's is one of the most practical way to work with emotional or psychological challenge right there. And we can see that in every day we make mistakes and we learn. We still learn about ourselves because trading is the best vehicle about self recovery right there. We discover ourselves. So you see that, and right here you see. We will try to make some type 2 right here similar to this. So basically we gonna see that, right? It's break, retest, reverse, but here test, break, and reverse. So this is type 1 and this type 2. So those two types of reversal that we are talking about right there. And yesterday it have the type 1 right there, but it better than that. It add one more confluent factor right there, which is a double bottom. You see right there, double bottom right there. Right, it's the first leg and then second leg. You get a double bottom right there. First bottom and second bottom. The second bottom give a very clear signal. We did see that in the past also. Let's see the last time we see a double bottom reversal. We do have that. Let's see. We do have that right here. It's similar, but it's not exactly. You see right there. Break, pick up, test from type 1 right there. Break, test this, and then reverse. Same thing right here. Right, break it, test, reverse. Yes. So similar to the setup we have, we're talking about right there. Yeah, the same right there. We have two in the row, double bottom right there. Beautiful. That's the very high reliable setup. And here's is another one right there. Wow. Wow, this one is so much better, maybe better. Basically, oh yeah, the first bottom is a reversal type 1. You see that? Accusers type 2. You have a test, break, reverse. Oh, wow. So you have a test, break, reverse. So it's type 2. We need to rework on this verbiage right here. Now we gain more knowledge, so we can rework on this verbiage, makes this more clear. Yeah, we work with that on this. So it's a double bottom right here. And it's a type 2 reversal, and you have two of them on two bottom right there. For setup, we don't see we don't see the type 2 right here. It's just break and reverse. But on the second bottom, we see the type 1 right there. So that's one of the setup that we want to cover real quick. All right, so let's take a look at the trade that we have around 11 more minutes. Let's take a look at the trade that we took today. All right, here's the recording we have for today, right, around 9:14. Right, we see the setup right here. we see this the Hill candle ran right there, and we anticipate it's gonna take out this PM, the previous day PM section, and then reverse because it's have a huge gap down. Let's see, but it's weak. So wow, and you see that it flips. So we see the huge buy side liquidity sweep right here, sell side excuses. So we saw a reverse right there. We said, wow, we jumping and wow, we jumping. See that we jumping and boom. Yes, the problem that we jump a little bit early and we get stopped out when it's go against us, but it flip again. See that? Boom. Let's see the first trade we do. So right here we see the right there, right? You see the flip right there, and then we said, wow, get ready to go long. You see right there, boom. Who thought that it's gonna be reversed from here? But it flipped, so it gives it an idea that we're gonna start and go long. And you see the sell side liquidity sweep right there, a long wick right there. Boom, the next candle, I believe we go long, but it flip back on it. You see the yes, it flipped back and it gave it a hard time right there. So be careful. We even though we know the direction, but we have to be, especially you increase the size, you have to be careful, otherwise you have kicked out a trade. Because the margin, they only let you lost $3,000. The max loss for day is $3,000. So that's the first trade we want to take. You see the flip? We see the flip, we jump in right away. See that? We jump in right away. Yeah, we jump in away. Yeah, that's right. But don't add the side yes, because when we add the side in, we get nervous. We move the stop loss too tight and we got kicked out. You see that? We're gonna see that. So right here, so 10 minutes it got flipped right there, right at 30, 9:30 to 10 minutes 40 right now. It flipped. We feel good. We feel good. We feel good at that moment. And let's see. Let's fast forward. Okay, you see that we're about to add right there. We put our click right there about to add the side. We add the side right there. Let's see. That's amazing. So it's about 4 more minutes left for the candle at 9:30. And let's see when we did that. Yeah, next time we need to patient, but yeah, patience better. But it's hard to know, sometimes patient, but patient can create to too much precaution, we fail to pull the trigger. So that's the dilemma that we have at a day trade. We have to face that dilemma, the challenge every day. Whether we jump the gun right away or have to wait. If we wait, maybe we miss the trade. So that is the constant variable, constant uncertainty that we must accept. I think the best to deal with that, we have to detach our emotion from that. Whether market go up or down or it hit our target or not, we have to stay neutral. Win or loss, it doesn't matter to us. I mean, it much easier to said than done, but we have to get to that level. In order to become a successful trader, we have to detach ourselves from outcome. Otherwise, if it's a lost trade, we feel down, we feel devastating. But if the win trade, we feel euphoric, we feel so unstoppable, and not good neither. It leads us to greed. You see right there, it come back our trade. Yeah, so we wait. You see, oh wow, 3 minutes already. So let's see. Wow, perfect. Okay, so now it's go to the 9:45. Let's see. Boom. That's where we
Order
at.
filled.
Yes, that's where we at. We thought, oh wow, now we go in, we can go long. Perfect. I mean, it's perfect, right? But let's see. Here's the challenge right here. Wow, we saw it. Wow. Now we start doubting, right? We start feel the pain. All right, we feel convincing. You see that? We move our. You see right there? We move our stop loss. We believe we move too tight, and you're gonna see right here. It's wow, man. Can you believe that? We feel so hurt right now. It's okay. It make us stronger. You see that? Oh man, it just barely make it out. So next time we have to put the stop loss, in the middle of this week, kind of weak right there. Oh, at the level. You see that level. So we can stay on the trade, but it's really, really, you see that? It pull out and then it come back with hours, and then now we have to engage again. Yeah, we know that it's gonna go. Yes, so next time put a stop loss right there. So we lose right away, 1,500 right there. But let's see. Wow, can you believe that? It come back one more time. Oh, now we scared. You see that? Now we scared, man. Don't estimate how the market.
Order filled.
Yeah, if we got stop out because the max, max loss right there. Yeah, even though we know direction, but the volatility, the fluctuate really kill us right there. We got stop out, and we hit our longest right there. You see right here, it go in exactly our direction right there. We have a huge profit right there. It just, you never know, because sometimes
Order filled.
sometimes we can get again right here, because we know that it's gonna jump because the Fed chairman statement.
Order filled.
Yeah, so we get a very quick trade right there. So the point we try to make that you never know. You have to take it. Sometimes you have to take before jump, but sometimes you have to wait. Especially we increase the size, it's very tricky. There's no a objective approach. It's not science at all. It's much like because we do trading and we based on a pattern, so it's like very subjective. You're not gonna have a concrete criteria right there. You are eyeball, right? So that's the challenge we have to face right there. So basically, wow, we see that it go up real high, we get again, and we take up one quick trade right there. So basically right here, you remember, yeah, we go along right there, but we got stop out because we put a stop loss too tight. If we put a stop loss right here, we should be good. Yeah, we got stop out. Yeah.
Order filled.
Yes, we got stop out right there. That's the challenge we made. All right, let's review one more trade right here, and then we wrap up. So basically right here, you see the trade right here. We do go long right here, but the trick is that here the trade we have So what is type 2? Okay, so right here, that's the reversal type 2 right there, which is test, break, and reverse. We saw that, and we're gonna aim for this target, right? That's the trade we take. So it's around, we aim for the targets, but you know what? When we execute it, we kind of scary cash. We don't let it run all the way. That's the bad execution right there. We identify and we see the targets, but we cut baby 6 hour trade. We just let it go, walk and come back, much better for us. Yeah, when we see this, let's look at the trade, and I think we engage right here at 12:45. So let's pull out the recording at 12:45. 12:45. Yep, let's see. Yeah, here's the recording of the trade. So we should set up, we're going right away. So it's the reversal type 2.
Order
test,
filled.
Break and reverse. So going, all right, and what else? So we at first we put a default right here, but then we move right here, but we see that level right there, and we should put right there, but we chicken. So see that, and yeah, we move to this. We know that it's gonna, because it already rate this buy side of this candle, it's gonna rate the sell side. It gives us rate the buy side right here, sell side, it's gonna rate the buy side, but also it's gonna reach that level. But we chicken out, we just leave it right there, and you see that we hit the real profit right there, 6,000 right there. But if you let it run all the way at this level, you see that we're gonna get more. You see that level right there? Right there, that's the mark, and it hit that level. If we let it run 1, 2, 3, 30 more minutes, 45 minutes, we have a huge gain right there. So, which is a little level, right? We let it run, we get another, 2R right there. Beautiful 2R right there. Yep, that's our lesson done right there. All right, thank you for your time and interest. We're only grateful for the opportunity. We do what we love, then success coming our way. Day by day, in every way, we're getting better and better. Have a great evening and see you next week.